Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw ES has been bouncing within a range with buyers a little bit more active off of the 56 to 58 area. And heading into the open, our short-term bias is going to be very neutral because if you look back over the last several days, you can see that ES is stuck in a range with the bottom of the range being around the 51 quarter and the 49 RTH low, and the upper edge of the range being at the 67 to 69 resistance, with the all-time high at 69.75 to 70 quarter. And so far we are running on fairly light volume. So if that continues off the open and we're not seeing a extreme one way or the other, so we're not seeing a whole lot of strength and we're not seeing any excessive weakness in the underlying internals, the momentum, and the other markets, then we could simply continue to balance within this recent range. So as the market comes down into the 51 quarter to 53 quarter area, responsive buyers can still defend and it can stay stuck in a range. And as the market goes up into the 67 to 69 and the 69.75 to 70 quarter all-time high area, sellers can be active there, and again the market can be contained within a range. So right now the main idea is that the market is very range bound, it's stuck in a balance area, and in order to break out or break down from this balance, we're going to have to see some excess in terms of market strength or weakness, and it's going to take some pretty decent upside momentum to break out, and by the same token, it's going to take some decent downside momentum to break down and hold below 51 quarter. Now, it doesn't mean that the market can't make a little poke above or poke below, but in order to really get a sustained move to new highs or a sustained breakdown below 51 quarter, below 49, we are going to have to see some decent downside momentum or a lot of upside momentum in the event of an upside break. So the market's very balanced, and for that reason, our bias is neutral. And we have to be nimble on the day time frame. Because the market is stuck in a range, we want to make sure that we are getting either good enough trade location on the trade so that we can sit through some chop, or we're taking momentum-based trades and there is a lot of clear momentum in the direction of our trade. Aside from those two, you want to sit out and wait. There's not going to be a whole lot of edge besides using those two ideas. So if you are entering, for example, in the middle of nowhere and there's no momentum favoring the trade idea, then the market can just chop short term, and as a day trader, you're probably using a 2 to 3 point stop, and just that small chop and balancing can actually stop you out, and it doesn't even mean anything, right? So it would be a very needless loss to get involved in the middle of the range without any underlying momentum or catalyst to drive the market big one way or the other, and then just get stopped out just from the noise. So today the idea is to be fairly selective in terms of the trade ideas, be more selective with trade location, and unless you're seeing some clear signs that we could get a directional move outside of this range, it's best to wait for the edges of the balance or just wait for a better spot where at least you can correctly play defense with your trade and allow it to work out, give it a chance to work out. So the problem with initiating a trade at poor location and without momentum is that it's going to be very difficult to properly give it a shot to let it work. And that's exactly why we're going to be very selective on the trades we take. And if that means no trades on a day like this, then that's perfectly fine too. You have to be going into the market within this context with that kind of attitude that you're not hunting for a trade setup. If one presents itself, then a trade can be initiated. But if a nice setup does not actually form during the day time frame, or we're simply not able to execute at the right time, at the right price, then it's better to let it go and wait for the next trade idea. Now, in the event of a breakdown below 51, like I said, you're going to have to see some pretty decent downside momentum for that to even take place. But if we're running on light volume, then the breakdown may not sustain. So even if we do get a break below 51, buyers can still step in potentially at 46, which is a high volume node, and very likely to be active at the 38 quarter, 39.5, and the 41 quarter to 43 quarter area. So by that point, you would be exhausting the range, and that is still a valid area of support, and we are still within a larger time frame bullish context, so buyers can be active in the event that we extend the range into the 38 quarter, 39.5, or the 41 quarter, 43 quarter. In the event of a range extreme, 32 quarter, 34 quarter would be an automatic buy. On the upside, if we get a breakout, sell side can still be active at 76.5 to 78.5, simply because you would be exhausting the range yet again into those areas of resistance. So those are the main ideas heading into the open. Very neutral bias. Let's see which side really presses here off the open, and we will take it from there.